Yeah. All right. So with that, I think we'll move on to a bit of more of a two-sided discussion. We want to talk about our just kind of our investing style. Are you a margin trader? Are you a day trader? Are you a long term hodler, as we're calling it now? So basically, what I'll do to start us off is I'll pull up this poll that Todd shared on Twitter this morning, which is pretty telling. So let me just refresh this, make sure we're not missing out on any votes. Oh, we got a few more. So 77% of people say that they are long-term holders, which I think implies that they're not trading very actively. They're probably buying and selling, I would say, less than a dozen times a year. Would you agree with that, Todd?
Yeah, I mean, if you're long-term, I mean, think about it from the capital gains tax rate. Where do the capital gains tax rates become long-term after 1 year?
Yep.
So your goal when you're entering the position is to say to yourself, I'm going to hold this for at least 1 year, and I may end up holding it forever. But it's definitely at least a year in my view. I think that's the way to define it. And then the way I would define swing trading is, you're opportunistic. You'll take something on and you may hold it for a week, you may hold it for multiple weeks, you may hold it for months. When the trend stops being your friend, you'll exit the position. And then of course you've got the day trader, which in my view is, I mean, you can cheat and sometimes hold things overnight hoping for a bounce the next day or whatever, but in the traditional sense, a day trader would be settling up every day and coming in the next day to see what they can win.
Yeah, I think that's a good way to sum that up. So with that, we're kind of looking inward. We're looking in the mirror here, looking at our own video feeds on our screens and asking ourselves where we fall in that spectrum personally. So Todd, I think I know what your response is going to be here, and I think you're going to say that you're a swing trader. But I'll let you speak for yourself.
Yeah, I've evolved. Joe, if there's a way to trade or try to make money in stocks, I've done it. and I think that it's so important, Joe, to understand and to know thyself, as you kind of hinted towards earlier in the conversation. You have to find the approach that matches your particular mental, capability or whatever, right? I mean, if you are somebody who mentally can't handle the rapids up and downs, gains and losses of being a day trader, then you shouldn't be day trading, right?
Exactly.
You have to find, so if you're somebody who, because of your work life, you're not at this full time or whatever, but you like to research individual companies, you like to deep dive into them, maybe you're more, destined to be a long-term buy and holder. You're going to stick with something unless your thesis breaks, and you're going to hope, go into every single trade hoping to own it for at least a year, and hopefully for decades upon decades upon decades. And I think that most investors don't fully understand, because of FOMO and because of other things, they don't really understand what they are when they first get started. They may start off being a value investor and then they become a growth investor. They may start off day trading and then realize that they can't, stomach day trading. So they go to position trading, and then they go to long-term buy and holding. So, I mean, it's an evolution in some ways for some people, but I think the earlier that you get started in being honest with yourself about the type of person you are, what you're, I don't even know the right way to explain it really, Joe, but what your mindset, I guess mindset is a good way of looking at it, what your mindset kind of defaults to, and then matching your trading style, your investing style to that. I think the sooner you can do that, the better. And I would love it in the comments if people just said, hey, I'm a long-term, or I'm a day trader, or I'm a swing trader, and kind of give a quick, explanation of what their style is. I think that would be a fun and fascinating thing. So again, if you're following us on YouTube, thank you so much. We really do appreciate it. It does help us when you subscribe and like the video. So please smash that like, hit the bell so you're notified of all the content that we're putting up. If you're listening to us on one of the podcast platforms, thank you so much for being one of the thousands and thousands of people who tune every week to listen to us on those platforms. But yes, I think it's important to kind of think to yourself, okay, and be honest with yourself about the type of investor that you are. In my case, Joe, it's been more of that slow evolution. And I wish it had happened faster. You know, I back in the late 90s when I first got in the business, I was very active trader. I don't know if I would consider myself a day trader, but I definitely did try day trading at different points. I also used options and I used margin and I did all sorts of things that caused me to blow up my account multiple times in the first decade of my career. And those I guess that tuition paid helped shape the investor that I am today. I would say that I'm best described as a hybrid trader in that I won't day trade. I maybe one day trade a year, if even that. I can't remember the last time I tried to do a day trade. I go into stocks, as you know, with the mindset of either it's a forever stock or a rental. So again, we're talking mindset here. So for me, a forever stock would be that long-term buy and hold. You know, my intention is to stick with this because it's a disruptive stock. I love the story. I love the growth. I love everything about it. And I'm not going to get shaken out just because of the price action in a given day, in a given week, even in a given multi-month period. There are stocks that I will own that are broken technically, that are forever stocks for me. And I'm just like, okay, whatever. You know, I've got good entries on them. I'm still up on the names. I'm just going to ride those out. So I would define probably the majority of my portfolio as holdings that I've had more than 1 year. I would say that a smaller segment, maybe 30 to 50, well, 30% probably of my portfolio is what I would call the rentals. And the rentals are more of the swing trade variety, where I'm looking at specific catalysts. It could be that they're tied to the business cycle trade. So, you know, names like cyclicals, energy stocks, steel stocks, infrastructure stocks, those kind of things where, you know, maybe I'll end up owning for a year, but that's neither here nor there. I'm buying with the idea that I'm not going to own them for it as a forever type of an idea. Maybe biotech, where I'm looking at a particular catalyst, like a phase 3 or phase 2 readout or a FDA decision, something like that, catalyst driven. Those would also be rentals. So I consider myself to be a hybrid. That works really well for me. I find that when I was doing day trading and using margin, using options, I couldn't manage my risk right. It did not feel right to me. And it wasn't until I started extending my horizon, my time horizon, that I started to feel more comfortable and had less stress, and my stomach stopped churning. I could sleep at night. Joe, how about you?
So I was just using my portfolio to kind of figure out like where I fall, at least as far as, you know, what I can prove on paper. And I definitely fall into that same hybrid camp. But I was just looking, and I'm about 50-50 stocks that I've bought in the last year and stocks that I've owned for more than a year. So this has definitely evolved for me over fewer years. So hopefully I'm getting to that point now where I have a balanced mindset. I don't think I'm quite there yet. I still have some laggards that I'm just not quite willing to cut loose yet. But yeah, same thing with you, Todd. I mean, I own, I think, 22 or 24 stocks, something like that. That'll increase a little bit over time. I'd like to get that into the 50 range as I start to save and increase my assets. So for now, about 50% of those have turned into forever stocks. Some of them I intended to keep that way from the get-go. Visa and MasterCard are two prime examples of that. Some others that have just kind of turned into forever stocks would be like IBM. I've owned for probably a year and a half now. I think Target as well, I've owned for over a year. So for me, it's less of like thinking I'm gonna buy this and hold it for a certain period of time. It's more, okay, when is this, especially now that I have access to all these great charts and information and research. It's more when does the fundamental analysis break on this? And if there's a big losing streak and I go from up 50% to up 40% in a matter of a few days, I might think about cutting that one loose. So to kind of sum that up and wrap it up, I'd say, yeah, I I'm definitely a hybrid trader, but I probably fall a little bit more into that kind of mid-range hold for a few months, 6 months sort of camp.
And that's not to knock. I agree, Joe. That I think it's just because we happen to be more of the longer term, whether or not we're talking a matter of months extending into years or whatever, doesn't mean that you can't make money being a shorter term trader. And we certainly have people who are using our research every week to fill their watch lists with great stocks that they could use to day trade. Free link below if you want to trial to the research, the idea generation. So there's nothing wrong necessarily on its footprint with day trading. I think where people run into the biggest risk, if you have a very short period of time, is where you're trading for a very short period of time, be it a day or the next day or whatever, is risk control. I know very few over my I've been at this since the late 90s, and I can count on one hand the number of people who were day trading then that are day trading now. Most of them end up wiping out. And one of the reasons that and if they don't wipe out, they're forced to put more cash in to support the account. That's why they're not wiped out. They got a margin call or whatever. So I think that if you don't use margin and you have just crazy good discipline, you're kind of like the Mark Minervini of day trading, if you will, where it's like, okay, immediately didn't work. I'm out. I don't care. These are products on a shelf. I'm not addicted one way or the other to them. I'm literally just trying to play price. I'm not going to let any other bias get into my way on it. Then great. That's good. But I think it takes a very, very particular mindset to succeed over time with kind of that day, with a more of a day trading or very, very short term approach. And I think it's just doing the homework now, the mental work now to figure out where you land on that spectrum is very important, because we've been in this raging bull market, Joe, right, for this long time, and it's made you look good regardless if you're a short-term or a long-term investor, right? So you have to be honest with yourself and realize that, well, I've had this huge tailwind to my back, so I'm day trading and I'm making money, great, but how much of that is because of the tailwind versus your own risk discipline, your own rules that you're following, that kind of thing. Be honest with yourself now. Now's the time to do that. Now's the time to do it. When the going's good is the time to have that soul searching moment.
Yeah, one thing that just popped into my head as we were having this conversation is it would be interesting to hear what if there's if people fall into that long-term buy and hold camp because they want to, or because they just kind of have to, right? Because they don't have the time. Like Todd and I, we kind of fall into the mid to long term because we've got day jobs. We have other things we do in life. We've got families and dogs and hobbies and stuff that keeps us busy. I can't be sitting at my Fidelity terminal for hours every day just waiting for the right time to buy stock XYZ. So I think for a lot of people it's probably the same thing. They're just buying and holding stocks in their IRA, and they're happy with that. And hey, it works for a lot of people. There's absolutely nothing wrong with that. I have to say though, I do applaud the day traders who have been doing it for a long time, because that is just exhausting, looking at a screen and like waiting for the exact right tick that you're looking for. I can't imagine doing that myself. I was thinking back, and I figured I've made precisely one day trade in my life, and I lost money on it, and I will probably never do it again. So that's basically that's my take on that, Todd. I don't know if that it would be interesting. I'd love to hear in the comments or on Twitter or Discord or whatever, however you want to reach us. We love to hear from our subscribers, our listeners, and our viewers. Just exactly for those of you who do fall into that buy and hold for a long time camp, if that's more out of necessity, or if that's a choice you make.
Well, the other way to go at that too, Joe, is you said right out of necessity because you have a full-time job. I'm not going to be staring tick by tick by tick trying to figure out if I can make 10 cents on a particular stock over and over and over again. That's one part of it. And then the other part of it could be that, how many people, because of their own mindset, can't take the loss, ended up becoming buy and hold investors, not because they went into the stock thinking I would be a buy and hold investor, but because the stock went down, they lost money, and they just didn't have the mental fortitude to cut bait. And now they're like rewriting their
I've done that.
Forgetting it and
yes,
saying, okay, I guess
I have done that with several stocks over the years, and I've gotten better recently, especially in the past few months, of just cutting those loose. Because for me, what's really helpful is to go in and look at my overall portfolio performance. So to see I'm up however many percent over, all time, but then also to see, oh, hey, look, I'm still beating the S&P 500. So if I cut this stock loose that's down 8%, 10%, in some cases it's like 30%. I'll be completely honest. If I cut that loose, it's actually better for me, because then I can deploy that money, I can deploy that cash into something that's better and that will kind of turn me around quicker than if I just held that same whatever it is for 10 years waiting for it to come back.
Right. In the fact, there's nothing in the rule books that says every individual stock is going to come back to our price. So
Right.
You run the risk of having massive opportunity cost. Can you imagine owning, I don't know, General Electric and not taking that loss to buy Amazon?
Yeah.
Back in 2000 or something. I mean, there are so many good ideas. So you have to consider the opportunity cost. I agree with you. And I think that's a great point, Joe.
Yeah, and I think just to wrap this up, like I would encourage all of you to do that. Go into log into your brokerage or your IRA and just see, like, year to date and over the past calendar year, how does it line up with the S&P 500 performance? I think the S&P 500 is like 35 to 40% in the past year. And so if you're up more than that, then congratulations, what you're doing is working. You don't have to be up a lot more than that, because let's face it, this has been an incredible run. But if you're not beating the S&P 500, then go and look at your holdings and figure out what you should really be cutting loose. And honestly, you might want to get a little bit more kind of trigger happy with it.
Yeah, you could just sort them. I always, when I'm looking to, I will sometimes make changes on the margin when I want to raise a little bit of cash during periods where I think I could get better entry points. And I'm trying to be very, very disciplined about that. I will sort my portfolio by return. And I will start looking at the ones that are my worst returners to say, is my thesis intact on these names, or am I just being hopeful? And I'll go down through each one to make sure before I do any other trimming or activity. So maybe that'll be a useful tip for some folks out there too.
Yeah, I certainly hope so.